let's talk about if you were to attempt to run inventory in QuickBooks Online and you wanted to try different methods. Now, these are the five methods, five possible methods I could think of where you can attempt to run your sales information and inventory information in QuickBooks, and the level of complexity that they would have. So I'm going to go ahead and open up QuickBooks Online here. And we're going to start with the first method, which is a full inventory workflow, which means you create every inventory item. That means you purchase all your inventory items and receive them. It means you do a sales receipt for each sale. So let's do a quick inventory workflow here. And for a lot of you, this might be a review and you already know basic inventory workflow, but let's cover it anyway, just to make sure that we have all the possible context here. So first, I'm going to go into my sales tab, products and services. I'm going to create 2 inventory items. Let me turn on inventory. It's a brand new file. So let's call it blue shirt. And we'll make this $20 retail. Make a 0 quantity on hand as of the first of the month. And a reorder point of 100. Okay, so it's a standard inventory systems. The cost is 10. So I'll go ahead and click on Save and Close, and I got 1 item. Now I'm going to go ahead and just duplicate the item here. And let's call this one red shirt. Let's put 0 as of the first of the month. Reorder point, let's say we want 50. Let's say the red shirt is more expensive, $22, and the cost is 11. Okay, save and close. So I got my 2 inventory parts created. They have a sales price, they have a cost, they have a reorder point. And if you wanted to track inventory in QuickBooks, you would have to have every single item that you sell in this database, right? So this is assuming that you don't use a point of sale system. And this is assuming that you have one of those clunky little boxes to run your point of sale system. Or maybe you have a point of sale system and you want to duplicate all the work in QuickBooks as well. Whichever way you want to go with this, okay? So then we're going to have to receive our inventory or purchase some inventory. So we're going to start with a purchase order. And let me turn on our purchase orders. It's a brand new QuickBooks Online file. So I need to turn on purchase orders, turn on inventory. All right, I should be able to do a purchase order now. Perfect. So let's buy this from China Shirts Ltd. Okay, and let's put on a purchase order for the beginning of the month for blue shirts. And let's put an order for 25 of them. And let's do red shirts. And let's do 30 of them. Okay, now, one little trick here, and I'm going to take advantage of this situation to show you something that's a bit out of scope from a basic inventory training, but I think it's important to understand the concept of landed cost, right? So let's say, for example, that these shirts are costing me $580, but I have to pay $100 shipping to bring the shirts in. So I'm going to go ahead and finish this transaction because China shirts, I'm only going to pay them $580. So I'm going to go ahead and click on Save and Close. Let's say I went ahead, I'm going to pay, let's say, DHL to bring the shirts in for $100. So I'm going to go to Expense. And let me put here DHL. And create a vendor for DHL. And let's say I'm going to pay from, let's say, my Amex. Let me create the account. I'm working with a brand new, fresh account. That way, everything is being created from scratch. That way, you kind of see the entire flow. And let's go to, let's add a shipping cost. Okay, so I'm creating a cost of goods sold account called the shipping cost, where I'm going to send all the shipping costs. And let's say that's a flat $100. And let's click on Save and Close. Okay, so I got my shipping cost of $100 and I got my purchase order of $580 for those shirts. Then I'm going to receive my purchase order, which I can do it a couple ways. One, I can pull up my original purchase order by looking at the history. and then clicking on where it says copy to bill. So that's one workflow, which is my favorite one to use, by the way. But then the other workflow is to go to a bill, just to create a bill. And then once you create, or once you select the vendor, you will have a drawer on the right-hand side that is going to ask you, would you like to add the purchase order to the bill? And at that point, you would just click on add all or add if there's no more than one. And basically the bill gets created with the items that were brought in. Now, let's say the original purchase order that used to be 10 and 11, and for whatever reason, the price went up and we didn't know that until they sent us the bill. I can just modify it here. Let's say they both went up by 50 cents, okay? And I don't have to go back and change my purchase order. So as long as the quantities are not being modified in just the sales price, we can just modify the sales price on the fly. However, we have another conundrum here, right? Which is we had $100 landed cost from our DHL. So if I wanted to add that into my inventory value, I would have to subtract it from my profit and loss and send it back to inventory value. Let me click on save and close first. So now we can see the end results of what we've done. So I'm going to go to reports. I'm going to go to profit and loss. And I'm going to do this year. Click on run. Perfect. There's my shipping cost of $100, the only expense that I have incurred. Let me duplicate the tab up here. And let me go to reports. And let me go to balance sheet. And let's go to all dates. And there's my inventory asset, 607.50. Now, if I go to, let me duplicate the tab again. And let me go to reports. And let me type valuation summary. And here is, it tells me that my asset value for my blue shirts is $262.50. And for my red shirts is $345 flat with an average cost of $10.50 and $11.50. One thing that's really important to know about QuickBooks Online, it's all FIFO. So it's first in, first out. That's how it does the average. Even though it says calculated average, it does go FIFO when it comes to the actual transferring the value from the balance sheet into the profit and loss. So the calculated average that you see there, it's an average, but when it actually posts, it posts in FIFO. So it gets a little bit tricky. So what I want is I want to move the $100 outside of my P&L and put them in my balance sheet. So I want to have, instead of $607.50 in inventory value, I want $707 in inventory value. So what I must do is I need to go back to that transaction where I received the inventory. So let me click on the search box and go to my bill. And what I'm going to do is under category, I'm going to take out the shipping costs. I'm going to put here DHL on Amex 0402-2020, whatever it is, right? Just to remind me of where I got the information from. Then I'm going to put here negative 100. And then what I'm going to do is I'm going to take the $100 and distribute it across my items here. So typically, that's really easy to do when you have one item, but it gets super complicated to do when you have more than one item. So I'm going to go ahead and open up a spreadsheet, okay, and show you how I would do it on a spreadsheet. This does get a little bit convoluted, but if you have a really high shipping cost, then you have to do landed costs, because it will get too complicated, too difficult to know your true profits, okay? So I got my blue shirt, and I have my red shirt, and then I have 25.30, 25.30, and then I have 11.50 and 10.50. Okay, so what I need to do is I need to figure out how much proportion is based on either the total value or the quantity, each of the products. So I think blue shirts are going to be what percentage of the sum of all the shirts. Okay, some people saying make the zoom in. All right, let me zoom in to 400%. There you go. Okay, make it really big there. I know with Excel it's hard via webinar, right? So we got about 45%. So about 45% of the cost of the $100 should go to the blue shirts. Let me do the same thing here. So I take this divided by the sum of these two. And naturally, because it's only two items, that would be the other 55%, right? So then what I'm going to do is I'm going to take the $100, right? The shipping $100, and I multiply it times that percentage. And that tells me exactly how much money I should be allocating from my shipping to that item. I'll do the same thing here. Okay. So then I have to do is I take the total shipping amount divided by the number of units, which is going to tell me $1.82 per unit. And then at the same time, $1.82 per unit. So what I need to do now is add $1.82 to each unit so I can successfully allocate $100 of shipping into each of the products. So this is more for retail, e-commerce, wholesale business that this would be for restaurants. For restaurants, this is totally irrelevant. So let's do 1.82. And we'll do here plus 1.82. Okay. So I successfully have the bill for the same $607.60, which is the exact same dollar amount I'm paying my manufacturer, but I have added the cost of the additional shipping. In the description, I'll put here original cost, $10.50, and then here I'll put original cost, $11.50. Very manual process, but if you want to have landed cost, this is how you do it. Then I'm going to do save and close. And now I have absolutely nothing in my PO. Let me just make sure. I have nothing in my point of sale system. In my profit and loss report. Sorry about that. I have nothing in my profit and loss report. 0, 0, 0. I go to my balance sheet. Now it's got 707.60. And I go to my valuation report. And now my products are worth what they're supposed to be worth. So a little bit sidetracked, but a really valuable piece and insight into how inventory works. Now, the whole spreadsheet deal, like some people are going to say, well, this process takes too long. You could have just taken the total $100 and divided by the total number of units. I could do that. That's possible too. In some cases, maybe you want to analyze it on a spreadsheet first. Some people might not use the quantity. I might just use the total value instead. So there's just different ways to do it. The reason why I went the long way is just in case you want to break it down in different ways. That way we'll let you know whether we should do it one way or the other, right? So is it fair to equally spread the $100 across all units if all units are worth different prices? Maybe not, right? So maybe you want to do proportionate to their value as well. So there's just multiple ways, multiple methods to do it. There's no right and wrong way. There's just a long way, right? All right, so I got my inventory asset, 707, and then the last part of the inventory workflow would be every time there's a sale, or maybe daily at the end of the day, then you do a sales receipt, right? Let's assume that we don't keep customer information. So we'll just create a customer called retail customer. Okay, some people call it cash customer, some people call it walk-in. It really doesn't matter. And then at the end of the day, let's say you're going to do a report for each day. Let's do this for the 21st. Then you're going to enter here all your blue shirts that were sold across all your customers, all the red shirts that were sold across all the customers. Let's say 12, and let's say 9. And I'm going to click save. And I'm going to duplicate this because let's say I'm going to do a daily sales also for the next day. And I'm not paying attention to sales tax or anything like that. I'm just showing you for now the process of dealing with just daily sales, right? And inventory workflow. And let's say this is 11. Okay, save. So now I can go back to my profit and loss report, and I can run a report for custom dates. And let's do 04/20/2020 to 04/22/2020. And then we'll do columns by day and click on run report. So now I got my daily sales and COGS, and that's the whole purpose of doing, possibly, if you want to, doing inventory workflow in QuickBooks so you can get an automated posting into your COGS. All right, good. Full inventory workflow, what would that look like? Every purchase to a vendor will have a full PO, and every daily sale, in this case, would have a sales receipt. In some cases, it could be, a an invoice too. If you have a mixture between retail and wholesale, I got some clients that are that, where they have a retail store, but they don't have a POS system. They just have one big wholesale process with a little bit of customer facing uh, uh, transactions. So for that, people just crank up a QEO and create a sales receipt for it. So there are cases in which you will be using the inventory system in QBO and you don't need a POS system. Now let's talk about a partial inventory workflow. So the partial inventory workflow is I'm going to use it to purchase, and I want to know all my purchases, but I'm not going to enter detail in sales, and I'll do inventory adjustments against my ending value of inventory. So what would that look like? Well, it would be the same thing, right? We'll do a purchase order for every one of our purchases. I'm going to do a bigger purchase order here. So let me do a purchase order of, actually, let's do a new one. Save a new. So let's do China. Let's do the next day. And let's do, let's say, 500 of these and 300 of these. 300, not 3,000. And then we'll do save and close. Okay, so I'm using a full purchase order process for that. I'm going to go ahead and receive my inventory. I'll receive my inventory for that purchase order on the 23rd. Perfect. And then save and close. Right? So when I go into my inventory valuation report, click on refresh, I have all my inventory in there, right? And let's say you don't do any individual sales receipts and we don't enter any sales in an invoice in a sales receipt. Basically, when the money comes in the bank, we just do a deposit, right? Like $5,000 came in sales. We go in there and we go to bank deposits and we'll put here, let's create a bank account here. Let's do cash on hand. And let's say that we had, let's create a sales account. This would be retail customer, and then we'll have a sales account. And then let's say we have $5,000 in sales. That's it. That's what we sold, right? So I'm not entering items. I'm just entering sales as they come in through my bank feeds or whatever, right? So when I pull up let's look at this month. I pull up my P&L. I have my sales in there, $5,000, right? But my cost of goods sold are not accurate because I am not entering each item automatically. So then how would I go about doing my adjustment in inventory? Well, let's say I run my valuation report and I go to my warehouse and I physically count my shirts. I physically count all my inventory. And I don't have sales to go by. I only have whatever's left. And then I'm looking at whatever's left and there's only 100 of each left. So then what do I need to do? I just adjust them down, right? Because I'm not using sales to track my reduction of inventory. I will just use an inventory quantity adjustment. So I do my inventory quantity adjustment. I'm going to send it to cost of goods sold. I'm going to select my blue shirt and the new quantity. Let's say we said there was 100 of each. So 100 of this one and a red shirt. And then 100 of the red one. And then we click save and close. Go back into my profit and loss report. And boom, I got my cost of goods sold in there, right? I'm losing money now, it looks like, right? So that's kind of the process, right? So we do a partial workflow where we only use inventory items for purchasing. We can track everything we buy. We can track everything we have in stock, and then we make the adjustment. This second option, it's valuable if what you want is to see your valuation report in QuickBooks. Again, let's go back to these questions, right? You went back and asked the questions, and they don't have a POS system, and they do want to use retail inventory in QuickBooks, and then you want to be able to answer the question, hey, my customer does want to see my inventory valuation by item in QuickBooks, but they don't need to see my sales by item or sales by customer. Then that's where this method kicks in, okay? So let's do the next method, which is partial inventory workflow, sales only. So for that part, you also create inventory items. You only do sales receipts, and then you do inventory adjustments against it. So it's just basically, I'm not going to show it, but same workflow. You only enter your sales receipts, and then you adjust your inventory workflow, your inventory valuation based on what that final count is, and you will not have any actual purchases in there. Now let's talk about the non-inventory item workflow, which is this fourth option here. What would that look like? All right, so let me go into sales and go into products and services, and let me create a new non-inventory item. So I'm going to create one. I'm going to call this one black shoes. And let's say these are $90 and our cost is $35. Make sure you turn on this I purchased this product from a vendor thing. So we do sales 90, cost 35, save and close. Then click on duplicate. And then we'll do white shoes. And let's say these are $110 and the cost is $47. Okay, good. All right, so now let me do my purchase order because I do need to have a purchase order. I'm gonna have a purchase order. I'm gonna buy this from India Corp. I know I should stop importing stuff, right? I should buy manufacture in the US. We should. As a matter of fact, we should. But it's a different conversation. So let's do white shoes and let's do black shoes. And let's say I'm gonna order 100 of each. Okay, so that's 8,200, but I'm gonna date this in March. Okay, because I'm gonna do it before we had all this inventory set up. So I'm gonna do this in March. Do a save and close. I'm gonna go ahead and go back to my purchase order and use the copy to bill workflow to convert my purchase order into a bill. And then let's say this is March 5th, perfect. Save and close, good. Now what happens is when I go into my profit and loss for March, so let's do March, I have all of my purchases go straight into my cost of goods sold, my purchase account. Actually, that purchase account should be a COGS account. So let's change that real quick. So I don't understand why the default chart of accounts in QuickBooks has purchases as a expense and not a cost of goods sold. Just like really bad design from the QuickBooks people. They need to hire more accountants, I think, to help them with this stuff. All right, so let me hit, let me do this last month. Last month, run report. So then all my entire purchases go to purchases, which is a problem, right? Because I need to know what's in my inventory. This is going to skew up all my numbers. Let's say I do sell some of those shoes, right? So let me do a sales receipt. So let's say I'm going to record for my retail customer on the 6th. I'll record, let's say I sold 4 pairs of the white and 7 pairs of the black. And then I click on save, go back into my profit and loss report, right? There's my sales, it's perfect. There's my costs, but then my profit's all jacked up, okay? So the value of using a non-inventory part would only be on the ability to use purchase orders and on the reports, right? So if I type product here, I have purchases by product and sales by product. So if I do purchases by product, okay, I can have all my purchases by product. Let's do last month. Okay, so I know exactly how much I purchased. It's not in my inventory valuation. It's not in my balance sheet, but I know exactly how much I purchased, right? So that has some value to the extent that you think that's valuable. But that's the value of having a non-inventory part. If I go back and search for the product reports and I do sales by product service summary, and then let's do this by last month. Okay, then I get my sales by product. I don't get profits. I don't get COGS because they're not inventory parts, but at least I get some information, right, about how much I'm selling these for and what the percentage of sales are. So there's some value on having non-inventory items in there. But then what happens is, how do I actually get my profit and loss to be accurate? So then you're going to have to do physical count of your inventory. And then once you count your inventory, your physical accounts tell you that you have, let's say, $7,500 left in inventory, right? So what you must do is you must do a journal entry to adjust the 8,200 by the 7,500. So we're going to go to journal entry, and then let's say that's the end of March. So we got March 31st. We do purchases. We're going to reduce purchases by 7,500 by doing a credit, and then we're going to increase our inventory asset by that 7,500. So you would have to calculate your valuation outside of QuickBooks and do the journal entry like this. So we'll do save. So then we get a P&L that shows a more accurate sales, purchases, and quite possibly, if I only also want to show the percentages, right? So I want to show percentage of income so I can know exactly what my gross margin is or my profit is. Then I know, look, my profit is 35.58%. So that's that method. That's that non-inventory item.